In 1772, the East India Company's own governor wrote a sentence to London that should have ended the company on the spot. By the company's own reckoning, 1/3 of the people of Bengal were dead. And the tax collection, he reported, had gone up. His words, not mine. Notwithstanding the loss of at least 1/3 of the inhabitants of the province, the net collections of the year 1771 exceeded even those of 1768. The revenue, he wrote, had been violently kept up to its former standard. Two things to carry with you. The man who wrote that letter was then handed the job of fixing Bengal, and within 18 months, the same balance sheet ends in a crash in London, a bailout in Parliament, and the company's tea floating in Boston Harbor. This is the hardest ledger in this series. We audit it anyway. History audited. Start with the system the Diwani created, because the system is the story. After 1765, Bengal had two governments. The Nawab's officials administered justice and kept order, responsibility without power. The company collected the taxes, power without responsibility. The company was not a state. It had shareholders, not subjects. Its men in Bengal were traders on 5-year postings, ranked and rewarded by one number, net collections. Revenue targets were set in Calcutta, farmed out to the highest bidder, and enforced without remission. No one in that chain was paid to ask what happens to a peasant province when the rains fail. In 1768, the monsoon came up short. In 1769, it barely came at all. Bengal had survived droughts for centuries. Granaries, remissions, princely relief, the old order had crude shock absorbers. By 1769, those had been dismantled or ignored. The treasury that might have funded relief now flowed to Calcutta and London. Through 1770, the province starved. How many died? The company's own officials later spoke of 1/3 of Bengal, the famous figure of 10 million. Modern historians, working through the records, argue for 1 to 2 million, perhaps more. The honest answer is that nobody counted. The record keepers were busy counting something else. Every estimate, high or low, is a catastrophe. Here is the centerpiece of this episode. Not my words, Warren Hastings' words, the company's own incoming governor, writing to London in 1772. Notwithstanding the loss of at least 1/3 of the inhabitants of the province, the net collections of the year 1771 exceeded even those of 1768. And how? His letter answers that too. The revenue was, his phrase, violently kept up to its former standard. While the province starved, collection was enforced. And worse moved in the shadows. Contemporary accounts and parliamentary debate accused company servants and their agents of cornering rice, buying grain cheap, holding it, and selling it dear into the hunger. The company denied the worst of it. The pattern of fortunes made in those years argued otherwise. No famine code, no meaningful remission. The machine simply did what it was built to do, collect. 6,000 miles away, none of this appeared in the share price. Bengal's revenues had turned company stock into the hottest asset in Europe. The dividend was raised and raised again, paid in effect out of a starving province's taxes. Then, in the summer of 1772, the bubble met reality. A banking crash spread from London to Edinburgh to Amsterdam. Credit froze. And the company, the richest corporation on earth, mid-famine, mid-dividend, discovered it could not pay its own bills. It went to the Bank of England and then to the government, holding out its hand. Parliament saved it, of course. Too big to fail. We covered that machinery in episode 1. But this time, attached the price tags. The Regulating Act of 1773. A Governor-General in Calcutta, Warren Hastings, the very man who had written that letter. A supervising council and a Supreme Court, the state's first real hands on the company's wheel. And one more rescue clause, easy to miss. The company was drowning in unsold tea, so Parliament let it ship that tea directly to America, duty-advantaged, undercutting the colonial merchants. The Americans answered on the 16th of December, 1773, by throwing the company's tea into Boston Harbor. Follow the ledger line because it is real. A famine in Bengal, a crash in London, a bailout in Parliament, and tea in the water at Boston. One company's balance sheet redrawing two hemispheres. Did anyone answer for Bengal? Parliament held inquiries. Clive, the richest self-made man in Britain, was called to account for the fortunes of Plassey. His defense became famous. Surrounded by treasure vaults, he declared himself, quote, astonished at my own moderation. Parliament voted that he had rendered great services to his country. He was dead within 2 years, by his own hand, at 49. Hastings stayed on, to govern, and to face, years later, a trial of his own. That story is coming. The famine itself? No one was tried for it. It entered the books the way it had been managed, as a line item. An audit is supposed to end with accountability. This one ends with arithmetic. The revenue was collected, the dividend was paid, the company was saved, and the province paid for all of it. Remember the close of episode 1. Empires built one document at a time? This is what those documents cost. Next time, the man sent to fix Bengal becomes the man Britain puts on trial for the crimes of the system itself. Warren Hastings and the trial of the century. This is Tareekh Hisaab.